Hi everyone, good morning. Please confirm me first about the audio and video quality. Hi everyone, good morning. First of all, please confirm me about the audio and video quality. Good morning everyone. Good morning everyone. Chaliye. So, good morning. So, let's start this session. So, I hope everything is okay. Okay, thank you so much. Let's start this session then. So, hi everyone, welcome to JAIIB CAIIB English Medium. My name is Aarti Pathak and here I'm going to cover today, especially the numericals. So, as you know, ABFM consists of your theory as well as numericals. So, today our main focus is going to be just numericals. Okay, so make sure if you are watching this session, okay, whether you are watching live, whether you're watching recording, make sure you are using your calculator. Okay, use your calculator, use your notepad and practice it. See, numerical is not about just seeing and auditing. This is not just audit thing. You need to work with your hands. You need to solve it in your books. Then only you are going to understand why we are doing it. And as you know, today is only Tuesday. You have Wednesday, Thursday, Friday, Saturday, and your exam is on Sunday. Okay? Means you have 4 more remaining days. So better you have time, practice as much as you can. Now, next thing is, remember one thing, whatever questions I am covering here, these all are from your IFBF book only. Okay, now in some questions you might see numericals are changed, but pattern is going to be similar, because in exam also the higher chances are they are going to give you exact question from your IFBF book, or they are going to just change few numbers in that particular question. So please practice as many times as you can. If you are practicing the same question for 2 or 3 times, you are going to understand it, and in exam if you are seeing the same question, you would not be requiring that much time. Correct? That much time if you require, that you are reading for the first time. Always remember, first time reading is actually a time taking process, but after second revision, third revision, if you are doing fourth revision, then things are going to take lesser time. So make sure you are revising, solving with me. Okay, today I'm going to give you the time also to solve it, and remember, always share your answers, because today I'm not giving any MCQ. Today we are taking only without numerical questions, and in exam the favorite part of your examiner for numericals is this type of pattern only, without option questions. So we have the options, at least you can select out of the 4, but in this you are not going to receive any options. Chaliye. So let's start then today's session with the very first question. The following information is related to XYZ Company Limited for the year ended 31st March 22. Now you have equity share capital 50 lakhs, correct? Then you have 12% bonds of 1000 each for 25 lakhs, sales 84 lakhs, fixed cost 6.96 lakhs, profit volume ratio 25%, income tax applicable 40%. You need to calculate degree of financial leverage. Now, what is this degree of financial leverage? Let's understand this first. Degree of financial leverage means, as the owner, correct, as an equity holder, I want to maximize my return. Correct what I am saying? Listen. As an equity owner, what I want maximum return, but without investing further. Correct? I want maximum return without investing any further amount. So how is this possible? By taking loan. Because the cost you are incurring on your loan part, debt part, is not going to be that same that you are going to incur in your cost of equity. So here you are taking the advantage of debt. Correct? So in this financial leverage, we are talking about how you can maximize the return which belongs to equity holders, in which you are going to take the debt part. So this is your financial leverage. Chaliye. Now, how do you start this question? You need to firstly understand that you have an income, you have a profitability statement, or you can say it is your income statement. If you know that one, you can solve it directly. But always remember, in that income statement, you require sales, you require variable cost, and then you receive contribution. Okay? You receive contribution, and then you need to subtract fixed cost, and then you receive EBIT. From this you subtract interest, and with this interest subtraction from EBIT, you receive earning before tax. EBIT means earning before interest and tax, and EBT is your earning before tax. Correct? So when you want to calculate DFL, you need to take EBIT divided by EBT. Means one thing above interest, one thing below interest we need to take. EBIT divided by EBT. So this is the statement we need to use. But if you see here, you can see that you know the sales, that is 84 lakhs. Okay, you can write it here, but nowhere we have any variable cost. So can you tell me how you are going to calculate the variable cost here? Here we don't know variable cost, but we have one ratio, that is PV ratio, profit volume ratio. Can you calculate here the variable cost, or directly can you calculate any different type of term from this statement? Can you calculate anything related with this PV ratio? Chaliye. So if you know it, then please share it, and if you don't know it, then make sure after this you know this point. Your PV ratio talks about contribution divided by sales. Okay? So PV ratio talks about that whenever you are selling one good or one product, how much contribution you are generating. So with the help of PV ratio, you generate one relation. Okay? So here you have PV ratio, that is 25%. You don't know about the contribution because we don't know about here variable cost. Correct? But we know about the sales, that is 84 lakhs. So if I multiply this 84 lakhs with 25%, I can get the answer for contribution. Now my contribution is 21 lakhs, means I am one step ahead. Correct? Now I can start directly from this 21 lakhs. Now please don't sit and calculate variable cost, because that is irrelevant here right now for you, because you want EBIT and EBT. Already you are one step ahead. So let's calculate from that point. Contribution is your now 21 lakhs. Fixed cost excluding interest is your 6,96,000. Always remember, don't get confused that why we are excluding here interest, because this interest we are going to subtract from your earnings. Okay? Earnings, that's why we are not subtracting from fixed cost. So 21 lakhs minus 6,96,000, and EBIT is 14,04,000. And tell me about the interest. What is the interest value? Yes, very good, very good. Yes, this is the only method we need to use here. Now tell me, what is the interest value here? Can you tell me, can you calculate the interest value? Can you calculate this interest value? So, how you are going to calculate the interest value? See, bonds, debts, borrowing, loan, all these will tell you that you have taken the debt. Okay? Any term they can use here. And one more term they can use here, that is debentures. If you see any of this, like loan, borrowing, debentures, that is your loan part, that is your borrowing part. Okay? So here you can take this 12% bonds of 1,000 each for 25 lakhs. So how to calculate interest? 25 lakhs into 12%. So this will give you 25 lakhs into 12%. So this is your 3 lakhs. This is your 3 lakhs. So finally, your answer for EBT is 11,04,000. Now, let's use the data and let's solve the final DFL. So, EBIT is your 14,04,000 divided by 11,04,000. 14,04,000 divided by 11,04,000. So, your answer is 1.27 times. This is your answer. Yes, correct. 3 lakh is your interest amount. This is the answer. And in exam, you need to type this 1.27 times. Correct? This is how you need to calculate DFL. Chali, coming to the next question. Suppose the earning per share of a firm that is doing the acquiring are 15, while the earning per share of the firm that is being acquired 6. Calculate the exchange ratio based on their respective earning per share. Now, this question is from your merger unit. In your mergers, you have one topic known as exchange ratio. Now, what do you understand with the term merger? Merger means here when two companies, they are coming together. Okay, when two companies, they are coming together. Means earlier, they both were separated. Okay, they both were working separately. But after the merger, they both are coming together. So in this case, either A is going to lead both the businesses or B is going to lead both the businesses. But when you are doing the merger, you need to compensate the target company. Suppose here you are merging with B company, correct? So here A needs to compensate B. A will compensate to B because here A is going to take over on B. So that is why you need to calculate the compensation. Check the compensation amount. See, if I am selling you this one pen, so in return, also I want something now. So suppose, let's take next example. If I am selling you my assets, so in return, I want money, yes, or something equivalent to the money. So what is that? That is compensation. So whenever I am giving you, I want also in return some money or some compensation to compensate whatever the resources I am supplying to you. So that is what compensation. Now, the compensation can be of two types. It can be your cash, it can be your shares, or it can be in the combination. Okay? What I said, it can be in your cash, it can be in your shares, or the third one, it can be in the combination of cash as well as shares. Now here, when we are calculating the exchange ratio, okay, exchange ratio is generally used for the shares. Shares means if I want to buy B company, if I am acquiring B company, and if I am purchasing their assets, their liabilities, so how many compensation I am giving, I am calculating in the nature of shares. So if the shareholders are getting, if the shareholders are holding one share, suppose in B company, then how much return they are getting, how many shares they are getting of A company. Okay? The B company existing shareholders, if they hold one share of whatever data they are giving, so in return, how many shares A company will transfer. Now, for that exchange, we call it as exchange ratio. Okay? That if any one shareholder who is present here, if he holds one share, and if he is coming in A, then how many shares the B will hold in A company. So how you can calculate that? With the help of exchange ratio. Now, in exchange ratio also you have different methods. Okay? So here one method is your earning per share. Earning per share. Now, here we need to use the formula to calculate exchange ratio. So, here you need to use target company, earning per share divided by acquiring company, earning per share. this is what the formula we need to use when you want to calculate the exchange ratio. Target company divided by acquiring company. So now let's read the question again, and you need to tell me which company is here target company, or what is the amount you are going to use for the target company EPS. Suppose the earning per share of a firm that is doing the acquiring are 15 and the earning per share of the firm that is being acquired are 6. Tell me, which is the amount you are going to take in your numerator? 6 or 15. You have only two options. 6 or 15. 15 or 6. Tell me in numerator, which value you are going to take? Yes, correct. So, in numerator, you are going to take the 6 because 6 is belonging to your target company. Okay? And this is your 15 is doing the acquiring, means the acquirer is 15 here. So what is the exchange ratio? 6 divided by 15, or if you want to simplify it, you can say 2 divided by 5. This is the exchange ratio you can calculate, correct? You can give the answer in this format also, or you can give the answer in your decimal, that is 2 divided by 5, that is 0.4 is your answer. This is the exchange ratio. Yes, correct. Okay, so make sure you are simplifying the data. Okay, but understand if they are giving you the options, so you are seeing the options and as per that you need to give the answer. Might be they are giving you 6 divided by 15, they can give you 2 divided by 15, or they can convert it into decimal. So you need to give the answer in decimal only. So make sure you are seeing the options and you are giving the answer. So the correct answer is 0.4 exchange ratio. Chaliye, coming to the next question. Okay, this question is again from degree of financial leverage. Here you have two scenarios, scenario 1 and scenario 2. Here you can see EBIT 1 lakh, interest, okay, EBT, okay, tax, okay, PAT, number of shares, earning per share. Then you have here EBIT 1 lakh 50, interest to 20,000, EBT 1 lakh 30, tax 65,000, PAT 65,000, then number of shares, and you have EPS for both the scenarios. What you need to calculate? Okay, so you need to calculate the degree of financial leverage. Can you tell me the answer? Just now we have calculated this DFL. Can you tell me the DFL for scenario 1? What is the formula you need to use? EBIT divided by EBT. In case of scenario 1, your EBIT is 1 lakh divided by EBT, that is 80,000. Yes. Then in case of second scenario, your EBIT is equal to 1,50,000 divided by EBT, that is 1,30,000. So for scenario 1, what is your answer? One lakh divided by 80,000. Yes, very good. This is your 1.25 times, and scenario 2, 1,50,000 divided by 1,30,000. That is going to be 1.15 times. Okay? So the correct answer is 1.25 for scenario A, and for scenario 2, that is your 1.15. This one is easy one. Okay, just now we have seen how to calculate DFL. Chali, coming to the next now. A company ABC Limited produces and sells 20,000 shirts. The selling price per shirt is 500. Variable cost 200 per shirt and a fixed operating cost is 40 lakhs. Okay. Calculate degree of operating leverage. Now in this question you need to calculate DOL. This is what we need to calculate. Now for the DOL we require contribution divided by EBIT. Everyone tell me the contribution here. In your first question, we have seen about the profitability statement. So please use that statement and calculate this contribution. Calculate the contribution here. So how to calculate the contribution? You need to take sell, that is sell price per unit 500, variable cost 200. Okay, so this will give me 300 contribution per unit. Now if I multiply with the number of units, so how many units sold during the time period? That is 20,000. So 300 into 20,000. So your total contribution is equal to 60 lakhs. Now from this you need to subtract the fixed cost. What is the fixed cost amount? Operating cost is 40 lakhs. So your answer is 20 lakhs. Now here this 20 lakhs is what? This 20 lakhs is what? Yes, correct answer is total contribution 60 lakhs. Yes. Tell me, 20 lakhs denotes what? This is what? 20 lakhs is your EBIT, earning before interest and tax. So if I use this contribution, that is 60 lakhs divided by EBIT, that is 20 lakhs. So this will give me degree of operating leverage. Yes, so the correct answer is 3 times. Correct? This is your correct answer. 3 is your correct answer. Yes, that is correct. That is your EBIT. Yes, chali. Coming to the next question now. XYZ Limited is evaluating the purchase of new machinery with a depreciable base of 1 lakh and an expected economic life of 4 years. The change in earning before taxes depreciation for year 21 is 45,000, assuming straight line depreciation and 20% tax rate. What is the operating cash flow for year 21? Okay. Both the ways you can opt. Both the ways are correct, but we need to opt the that point or that method which is actually time saving one. Correct? Chaliye. So tell me now. The same you can use in your exam. In both the ways you are going to receive the same answer. Now here you need to calculate the operating cash flow for year 21. So let's first calculate the depreciation. Okay, first we want depreciation. So tell me, what is the depreciation value here? If you have purchased the machinery for 1 lakh and the economic life is equal to 4 years. So remember, depreciation formula is cost minus scrap value divided by life. Cost means the purchase price. Cost means what? Purchase price. Okay? Life means number of years you are going to use that particular asset. Scrap value means at the end of that machine, at the end of the life of the machine, at what amount you can resell it. You are going to resell it, so that will denote here scrap value. Okay? Or you can see residual value also. Both will denote the same thing, scrap value, residual value. But always remember, if in exam they are not giving you any scrap value, don't consider any amount from your side. Okay? So what is the cost here? Yes, 1 lakhs. Minus, as scrap value is 0, use 0. Okay? And the life is what? 4 years. This method is your straight line method. Now your answer is going to be 25,000. Now remember one thing, in exam, if they are saying to use straight line method, but if they are giving you some percentage, if they are giving you the depreciation percentage, then how you need to calculate the depreciation? In case they are giving you percentage for depreciation, then how to solve it? Take the cost or purchase price, you can say, and multiply with the percentage of depreciation. Just multiply it and you will get the answer. Okay? Both the ways you can see for calculating depreciation. So, this is the value of your depreciation. Now, we need to calculate operating cash flow. Okay, chaliye. So, let's calculate operating cash flow. Operating cash flow means what? Operating cash flow means the actual cash that you have generated. Okay, after paying all your liabilities, all your taxes, what is the ultimate cash flow that you have generated? So here you need to make sure that you need to adjust one part. So I'm not telling you now what you need to adjust. Let's calculate it and let's see how many of you can know it. Okay, so let's continue and let's solve this. So here you have earning before taxes and depreciation. Earning before taxes and depreciation. No interest, If they are not giving you any interest value, so please don't consider any value then. Leave it. Now they are saying this is the earning before you pay tax to the government and you have also not deducted depreciation amount. Always remember, tax is paid when you have deducted all your expenses, whether that expense is your cash expense, whether that is your non-cash expense. So, before you pay the tax, you need to deduct all types of expenses. So, tell me, what do you need to deduct here first? Tax or depreciation? Because you have only these two things here. So, what is the first thing you are going to deduct here? No, we are not going to consider any scrap here. Nowhere mentioned about the scrap. So I think you got confused in two different formulas of this operating leverage only. See, one way to calculate the operating leverage is you can take the contribution and you can divide with EBIT. Okay, and the next formula is in which you need to take the changes in your EBIT divided by changes in your sales. In that, I think you got confused, sir. You can use both the formulas, but you need to understand which type of question they are asking. If they are asking about the changes in your EBIT, changes in your sales, you need to take that DOL formula. But if they are giving you only the contribution, EBIT one, then you need to go with the formula that I have used here. I hope, sir, you got the answer. No, I mean in your other formula on depreciation. No, so I think you are asking about the other formulas like WDV. Okay, then you are asking for that units of production method. So there you are not required to deduct this scrap value. I hope you got the answer. Puspinder ji and Madiha ji, I hope you got the answer. Chaliye. So tell me, here you need to deduct the depreciation. Correct? So what is your depreciation here? 25,000. So this is your earning before tax. See, government will always take the tax amount. If you are earning government will take the tax amount, but they will give you that relaxation to deduct the expenses, all type of expenses, whether that is your real or the actual flow of expenses or non-cash expense also. Now, tax is 20%. 20,000 into 20%, this is your 4,000. So, tell me, this is your